Good afternoon, guys. It is February 7th, Thursday, about 4:45 in the afternoon, and I'm coming to you with a trading recap from today's earnings plays, as well as a review of the stocks that I currently hold positions in outside of earnings plays, and then potentially looking at a couple of stocks which reported earnings this afternoon for potential trades tomorrow. Probably will maybe give you an update again on those stocks tomorrow morning because some of those stocks can move quite a bit violently in the pre-market hours, in addition to after hours when they report earnings, as we saw today with GrubHub. So I'm going to start just with an overall look at the market. You can see the S&P 500 here. It has rolled over from its 200-day moving average, which we talked about as an area of resistance on the S&P, and that's kind of what I thought would perhaps happen is a rollover here, at least a little bit. Today, you can see it's gapped down, and it was a lot weaker earlier in the day. It's recovered some of that and is down about 1% today. Um, in the morning you can see it made a pretty big down move and then was consolidating most of the day until the very end of the day when it looked like a bit of a short squeeze happened. You can see it a little bit better on the E-mini S&P index here, along with the volume. So you can see there was a higher volume during that first down move, and then much lower volume during the consolidation for the majority of the day, and spikes in the volume towards the end of the day when you had a little bit of what looks like a short squeeze from intraday trading. So the S&P 500 has some levels of support down here. I don't anticipate this to be the only move to the downside. I think it's the day one of a potential rollover in this market, potentially retracing to some of these support levels, or even down a little further into the like a 50% retracement of this huge move that it had off the bottom in December. But so we'll just have to look at it on a day-to-day basis and just keep analyzing it. This is day one of the down move, so I'm not getting too excited, but but I'm looking for a retracement, a bit of a retracement because um, some of the trades that I have in options are puts and you know net call spreads, basically selling call spreads. So um, we'll look to analyze this on a day-to-day basis. So let's go into the trades for today. First, the earnings plays that we talked about in the morning and yesterday uh, were FireEye, and a lot of these trades did not pan out today. They didn't even set up as trades based on some of the predictions or thoughts based on technical analysis that I was making. So I actually didn't take too many earnings trades today, just two out of the list that we talked about yesterday and this morning. So the first on the list is FireEye. This one was a no trade for me. It was uh, you know going to be a long trade off of a bounce of the $16 pivot or the trend line down here. But since it never got over its first 5-minute high, I did not take a trade on it. It did bounce off the 16-day pivot, but stopped at the moving average, the 50 moving average on the 5-minute chart. So, you can see here it just kept making lower highs and never really broke out above that first 5-minute high, which would have been giving me the buy signal. So I'll keep an eye on FireEye. I mean, it looks like it's just having a pretty good consolidation day today after a big move to the downside off of earnings. So I'll look for some potential weakness down back to this trend line, and then either a break of it for further weakness or a bounce off of it. So we talked about those options. We have lots of pivots to look at if it makes um, uh, one move versus another, but looking for at least a move to this trend line to the downside, and then we'll see what happens after that. So that's FireEye, no trade there. Also, we looked at Twitter. Twitter was, uh, you know, one stock that I probably could have taken a trade on based on my, my thoughts on the technical analysis. I was looking to short this stock if it got below 31. Um, it would have been a loss. I would have taken a loss. I would have been stopped out of this trade. But the trade was after the first 5 minute bar to sell the stock if it was below this $31 pivot. So it did right here. I'll go ahead and put an arrow so you guys can see. Right here would be the trigger point for the buy, or rather the short of the stock. And my goal was, to sell it for a move down into this area, either the 29 area or the 28.50 area. Um, it did not get there. It just kind of it went straight back up and then just kind of meandered throughout the day in this consolidation pattern. So if I would have gotten in here, I would have been stopped out right here because my stop is always the usually the top of the bar on which I enter the trade. So the top or bottom, depending on the direction. In this case, it's a short, so it would be the high of the bar that I entered the trade on, and that would have been this second 5 minute bar here. So no trade in Twitter. I was actually kind of busy looking at some other trade setups that worked out quite well today. And just missed this trade. I guess lucky me because I definitely would have lost a little money on that trade. So I will continue to watch Twitter. Exactly the same situation as FireEye. Huge gap down, consolidation, looking for a continuation of this down move actually into this level of 28.50 and then this trend line here. So I'll look to see if Twitter shows weakness, and if it gets below today's low tomorrow, I might look to short it for a move down here. If it does not, and instead at some point gets over today's high, I will look for a gap fill. Um, my inclination is to say that it will show a little further weakness, especially based on the fact that I think the market's also going to show a little weakness in the coming days. But we shall see. So we're keeping an eye on Twitter and keeping an eye on FireEye. Next up, we'll go ahead and talk about GrubHub because that is one of my best trades today. It's very strange because it it worked out well, but not in the way that I thought it would. So sometimes the market will surprise you and give you an even better opportunity than you thought you might have going into it. So when I put my video out this morning, I think that GrubHub was up here in the 89 area or right around here. You can see once the conference call and earnings were released, they had a sharp drop down all the way, to this area in the 70s and the low 70s, and then subsequently, as the market opened, dropped all the way down to the 66, 62 area, which actually is 2 cents away from the low um, of this inverted head and shoulders pattern that we talked about. So I thought GrubHub was going to be very strong. I believe in the stock. I think the technicals looked great, and I was looking to actually buy it on any weakness. I think I said I would buy it on any weakness, but I really didn't expect it to go below this 83.95 level. So I thought if it showed weakness in the morning, I would buy on any bounce, on any dip. If there was a 3 green bars or red to green conversion or rounded bottom, I think I said, around this area here. I was like, if there's any weakness, I'm going to buy it, for a swing trade because I think it would go up, in the weeks ahead, in the days and weeks ahead. So, did not happen, obviously. It actually fell quite hard. And so because I was watching this pretty closely and because it showed support at this level here, which was pretty much identical to the bottom of this inverted head and shoulders pattern and a pretty big pivot as well, I was waiting. I just sat and waited for a red to green move or a dip buy, and you can see here a dip buying opportunity rather, and you can see here it gave us a really good dip buying opportunity in GrubHub today. So what I mean by a red to green move is if a stock is, falling or has fallen hard or is making new lows like this on a big gap down. You can see has all these red bars, which are of course negative. This is selling pressure. And then the very first green bar, you look for you know kind of a pivot, basically a pivot point. And this green bar here, the first one, is a pivot point. You can see that it has it is the lowest low of the two bars next to it. It has the lowest low, so that's kind of a swing. That is actually exactly a swing pivot right here, and it is a good setup for a swing trade. But I also like to see a conversion from red to green or green to red if it's a short. So you've got four red bars here, three pretty heavy ones, and then you have three green bars in a row on stronger volume. So here's the pivot point. You could have taken a trade over this second green bar here if you were more aggressive. I am a little bit more conservative in my trading. So first buy point could have been right here at 67.69. But I waited for that third green bar, and I actually didn't buy it right away. I actually gave it some time to see if it would come back down, and actually bought it right here after this bar, this fourth green bar really, um, and bought it as this bar was coming up. So not at this red little doji, but actually the arrow should be a little closer to this green bar because I bought it right here over this little consolidation range. So right at the 68.95 level, I believe, is what my trade was. So I only bought half the position I was going to buy just because of all the weakness it's had, and I didn't really know where this stock was going to be headed today because, as I said, I thought it was going to be staying up in this area. So I bought half a position right here at the 69.50 level. Uh, Sorry. Yeah, 69, not 69.50, 68.90 level. And then you can see what it did after that. It had two huge green bars, very good volume, which gave me a little confidence that this was probably, going to sustain as an up move from this pivot point down here. So after these two green bars, so what I did is I put a Fibonacci retracement from the overnight high of 89 to the low of 66.62, which it hit, in the morning first thing. So that was my first target. And so I do put Fibonacci's on there to give myself targets where there are no pivots and where there really isn't any kind of direction, especially on stocks that are gapping hard. So you can see I bought half the position here. I actually bought more of the position after after it cleared this consolidation area. If you look at the pre-market, it went down. It had that huge red bar down and then kind of stayed in this area for a minute and then went down again for a few minutes, obviously for like 45 minutes, and then went down to the 66.62 pivot and then came up. So I bought half here and I was going to wait to buy the second half until after it cleared this little area right here. So once it cleared this area, this pivot right here, this little green bar, the high 73, I bought the second half of my position. Stayed in that position until my target of the 50% Fibonacci. I actually sold the first half of my position right at just below the 50% the 50% mark right here because it spiked up and then started coming down. So I went ahead and sold it because it could easily have come right back down. So sold half my position right here, and I decided I would hold the second half because really, I mean, it had gone up so much. It had the potential of filling the gap actually that it made, due to the earnings report. And you can see that is exactly what it did today. It filled the whole gap and then some, and it went all the way up to that 83.95 pivot that I was talking about pre-market as a pivot to buy it at if it got to that level. But because it had fallen so hard and had come all the way back up to that pivot, I used that as a target because it acted as a point of resistance, as you can see here. So I sold my second piece, the second half of my position, as it was coming down from that 83.95 pivot at the second red bar, at the start of the second red bar. So once it hit that 83.95 level, and the next bar was a pretty strong red bar to the downside. I waited for the next bar to be formed, the 5 minute bar, and went ahead and sold it as it started to develop into a red bar. So all in all, pretty good trade. From about the $69 level to the $82 level. On half of the position, and the other half I sold. At that 50% fib area around the um, 76, 77 level. So scaling into the position for me is a little bit safer in a situation like this because it is so volatile and you just really don't know what it's going to do. This move down had to, obviously was some sort of news driven, something that was said on the conference call move, because the stock just, as the earnings were reported, it was just like a knee jerk to the downside. And then as the conference call was happening, and maybe people were getting their senses back and realizing that it wasn't as bad as it really sounded on the earnings, the stock just recovered very nicely. So I went ahead and sold it. But you know, it could go back up. Through this, this could have just been a one-time anomaly type of move, and it could recover. So I am still, keeping an alert here at this 83.95 area to see if it does cross back over and go back up. So I will be looking, at this trade. Like I said, I think this stock could show a lot of strength over the coming weeks. So I'll be looking for some strength in this stock going forward. Granted, with the market being so weak, I don't know if it's going to just immediately pop up like that. But it could consolidate a little bit and then, um, continue its move to the upside. So I'll be keeping an eye on GrubHub. But it ended up being a really good trade today, much better than probably a trade that I would have taken if the stock would have held this area. So that was GrubHub. Um, and I think we did talk about Hain Celestial. I didn't take a trade on it, but I wanted to point it out again because it ended up being a good trade if you wanted to trade this stock. We talked about Hain having some strong support here at the 1311 level where it hit in the pre-market, and it was already up at this 1501 pivot, which was the prior low here. And I had talked about buying it, over the first 5 minute high if you thought it would be going long for a potential gap fill, or even, up to a 50% Fibonacci retracement, 61%, or even the 200 moving average on the 5 minute chart. So you can see it actually turned out to be a decent trade if you would have taken it. I did not plan on taking a trade in Hain, but I wanted to share it with you since I did share this stock earlier as a potential trade. The last stock I took a trade in was Chipotle. So I took two trades today, one in GrubHub and one in Chipotle. Um, Also turned out to be a really good trade. On Tuesday, I actually talked about this stock being quite strong and potentially, making a big move to the upside based on this longer term. You can see inverted head and shoulders pattern on the weekly chart. This morning, I mentioned that because it was showing some weakness here, just a little bit of weakness, but it was showing some weakness here. I said if it continued to be weak in the morning, I would look for it to pull back to the 200 moving average or the 50% fib, and then potentially bounce off of that. And that's what I was looking for if it showed weakness in the morning. But I went back to my original hypothesis on this stock once it started, moving to the upside and showing strength versus weakness, because it did not show any weakness today at all after the open. So again, inverted head and shoulders pattern here with a breakout in the, to the upside. It broke out on the overnight to this 579 pivot right here. And then what the trade was going to be was to buy this stock over the first 5 minute high if it crossed over that 579 area again. So if it showed some strength and was crossing back over the overnight high, and the 579 pivot, the move would be to buy the stock, and then we actually put some targets using a 50%, using the Fibonacci uh, extension levels, right? So here's a retracement to the, here's the Fibonacci levels of the 50 and the 61.8% retracement. These dashed lines are the extension levels, right? So when you have a huge gap here, you really don't have any, gap between pivots, and you really don't have any, true resistance points to use. I use the Fibonacci extensions of the 23 and the 61. So what I did on this trade here with Chipotle is to buy this stock right here after the second green bar, after it crossed over the 579 level, around the $580.75 area. And I sold half my position at that very early, just 5 minutes after buying it, 5-10 minutes after buying it. Excuse me, didn't mean to put that there. So you can see here, the trade was buy here, sell right at that very first touch of the uh, Fibonacci extension. So I actually waited for the second bar to form here because it touched here and it came down and then it started moving back up. I went ahead and sold it right here, half of my position, and then let the other half run. And what I was looking for is for it to go back, to go further up to the 620 area, and then I was planning on selling half there. As you can see, that didn't happen. It got up to 606. I didn't sell it. I was going to, let the VWAP or the moving average be kind of my, my stopping point. So you can see here, as it was coming down from this consolidation area, this bull flag, as it was breaking down below the low point of this consolidation area right here at the 594.50 area, I went ahead and sold the rest of the position out. So still, still a pretty good trade from the 580 area to the 593 area for the total trade. Obviously, some of the position was sold up here, but all in all, a pretty decent trade for about $10 to $13, on average. So Chipotle worked out well. It did sell off towards the end of the day. But I mean, overall, if you take a look at the stock on a daily basis, you can see the huge gap up, and it has the potential. It has the potential to keep going. It did kind of retrace half of the move, so I mean, we'll just see how Chipotle acts. But it was a good move on earnings. I don't intend on trading this one again because not at least not right away because it does have a little weakness. It did show a little weakness towards the end of the day, but and it's a pretty expensive stock. It's actually a little bit more capital intensive to trade this stock. So we'll just try to keep trading it on earnings related events where you have a binary event moving the stock with momentum. So that's Chipotle. Also, I wanted to just share with you guys about Electronic Arts. This was an earnings trade from the other day that I didn't end up taking at all in EA because we were actually expecting it to go further down and then bounce. It never did. In fact, it consolidated quite a bit in the first part of the day yesterday, and then shot up actually to near this 81.54 pivot, and then kind of consolidated for the rest of the day. Well, you can see today, if you were watching EA for a long trade, if that was for the gap fill, which is what we talked about, a potential gap fill in the days after earnings. Once it crossed over the prior day's high, right here at 81.54, and that was a potential trade to the long side. So if you would have, I did not take this trade, but this was the entry point over the prior day's high. So I just wanted to share that with you guys that EA is filling the gap as we speak, and it hit all the way up to this right near the 61.8% Fibonacci retracement from that gap down on earnings. So that is EA. And lastly here, well, not lastly, but the last position that I was holding that I sold out of um, today was Array Pharmaceuticals. And this was actually one that I was holding for been holding for a few days and was looking for for the stock to go up to this trend line here. That was my target on Array Pharmaceuticals. You see, it had a pretty big move in the overnight session, not on really any news, honestly, and started showing a lot of weakness in the morning, and then popped back up, um, right up almost to just above the overnight high, and then started coming down again. So it's pretty volatile, not the best action, but it was still up, for the day, and I was still up from the prior day. You can see here's yesterday's and day before's action, and then today's pretty big topping tail. So I went ahead and sold. I had three um, call options on this stock from down here, and so I sold two out of three of them as this uh, stock was coming down from its highs today. I went ahead and sold it here because it didn't it didn't kind of show any support around the 50-day move, the 50-minute moving average on the 5 minute. So as it was coming down below that, I went ahead and sold two of the three options. So you can see it didn't really recover the rest of the day. It's actually been kind of weak. So I still have that last option. So we'll see what it does tomorrow. If it gets below today's low, I will sell out of it. It will still be profitable, but I think that if it starts to move in this direction, like below today's low, uh, that to me is probably bearish for the short term, and maybe it can't make it all the way up to that trend line, but it made it pretty close. Um, and it just may be consolidating again or coming back down into this channel or whatever. So this is really the gist of it is that if it shows some weakness tomorrow morning, or gets below the low of today tomorrow, I will sell my last call in Array, which has been a decent trade as well. Um, just talking about the weed stocks, I also mentioned to you that I had Tilray. Still have it. So if you recall, this one is I'm keeping this unless it gets below 70. That's my stop on my one call option that I have on Tilray. So it was a little choppy today, but ended up being up 2%, 2.3% today. So a good recovery from some of the negative move that it had yesterday. And we'll see how it acts tomorrow and in the days ahead. But we're looking again for this stock to go higher from here, and are holding the position unless it gets below 70. I did have a put on Kronos as well. I did sell the put this morning, first thing almost, because I did not get it actually down here when it went all the way down to 1872. But this morning in the pre-market it showed weakness, so I anticipated that it would actually be weaker, but it actually recovered quite a bit pre-market and then kind of spiked down and just bounced like a rubber band was being snapped back. So as this was coming up, this is the first 5 minute bar on Kronos. Once it started crossing above that first 5 minute bar, I went ahead and sold the put. Actually, it was it was a little bit above here, in this area right there. So that's when I sold the put. So I'm out of my short, which was profitable because it was still down for the day, even at this area. It was still down. It actually recovered quite a bit. Had I been a little bit more, more reactionary and quick, I could have just reversed the position and taken a long, and it would have probably generated quite a bit of a profit there. But looks like it's a bullish engulfing pattern here, almost. Actually, not quite, but it looks quite bullish. You have a little bit of good volume on the up move as well, so Let's see how Kronos acts in the next couple of days. It still had a pretty big spike and is pulling, had pulled back from that spike. So if it continues to go up, I'll probably have to wait until it gets up above this area here before even trying to enter it again. It's been quite a parabolic move actually. So I was looking for it on the short side. Who knows? It could come right back down. These pot stocks are quite volatile. So I did what I thought I had to do based on the action, and I thought it was a good decision in Kronos to go ahead and take my profits on that put. Um, the other couple things I wanted to just mention were the just the FANG stocks. We talked about yesterday the market rolling over, and sorry, did not mean to put that in there. We talked about the market rolling over and how a lot of the FANG stocks would have to start rolling over. The one that I talked about specifically uh, being an interesting short idea was Google. Not that I was going to take a short on it because it is quite an expensive stock, but it did close below its 200-day moving average yesterday, and you can see that it's gapped down today and has shown quite a bit of weakness. With really just the market being down. So, Google showed some weakness. You also had the other FANG stocks, Amazon. You know, again weakness. I have a I've sold a call spread in Amazon at 1750. So I actually am not short Amazon, but I have sold a call spread, a 1700 1750 call spread, which means if Amazon stays below 1700 in the coming 3 weeks, 2 weeks, that option will be expiring worthless, and I will have made my full profit on it. So it's basically being short Amazon at this point. But as long as it just stays below 1700, that position will be good. So I'm looking for it to kind of come down a little bit more. I'm not going to let it expire. I usually take my profits at 50% uh, of any call spreads or put spreads. Any kind of spreads, I usually take profits at 50% of the maximum profit. So I'll be looking to buy that spread back right around this area. So Amazon needs to come down a little bit more, or time needs to pass, one or the other. So that's Amazon. You can see Amazon's down as well. Um, I won't go through all the FANG stocks, but it's just a testament to the market rolling over. The FANG stocks and other big tech stocks kind of have to participate both on the upside and the downside for the market to kind of move in a certain direction. So they are all rolling over today, which is a good sign for the bears or for people who are looking to take the market short. So just wanted to point that out to you, and then I will show you a couple of the earnings plays that stocks who have already reported earnings this afternoon, as we just go into the morning session. We'll have to look at it again, of course, but we'll start taking a look at some of these stocks. So the first one's Expedia. We have Expedia in a somewhat of a downtrend for the past several months. These two big moves here are actually on earnings. They get big earnings gap downs actually here. This one was actually last year at this time. This February earnings for the fourth quarter earnings basically reported in February last year, 2018. So it gapped down quite a bit. Today it looks like it is gapping up. So it went all the way. Actually, very interesting action because when I looked at it before, it was down. I'm going to go ahead and put it on a 2-minute bar so you can see just such volatility in this stock. Um, you can see that first started kind of uh, it first started going up after the earnings report was released. Then it's strong move to the downside from there, all the way from 132 down to 123, big $10 move. And then after the conference call, it has spiked up hard Must be on some additional news from the conference call. So yeah, it's forecast for this year. Must have been very good. So it spiked from the 128 area all the way up to 144. So it's actually way up here at this point. So it's gapping up around the 138 area, which which is a pivot. Uh, so if it stays in this area tomorrow, we'll be looking for some either continued upside in Expedia, through some of these, uh, through some of this gap here, as well as to this pivot of 145. Pardon me. Oh, the allergies are terrible in this area. Um, so that's Expedia. We also have, I think, Skechers. Yep. So Skechers had a good earnings report as well. It beat on earnings and revenue, and it is spiking pretty hard as a result. So Skechers also kind of an interesting chart pattern. If it opens up tomorrow where it is, it will be right up here at the beginning of this gap, and I'll show you on the daily chart. It's much easier to see. It has a couple of gaps actually. So you have the one that was already filled right here, this gap, which was filled by this spike, and then the next gap is this big gap right here from May. It started to get filled here, but it wasn't successful. So you can see that today, after hours, it has the stock has spiked all the way up to this $32.18 pivot, and is actually in the gap right now. You can see right here. So I would be looking for either some resistance at this gap or continuation. So it really totally depends on what the stock does first thing in the morning after the open. I've got some trend lines on here. You've got this trend line here, which was a shorter term trend line of this little island. And you can see here, actually, the stock did gap down and came back up to this trend line, and it showed some resistance there and here. So it's had two areas, two times where it's hit this trend line and has actually kind of fallen back from it. And so that trend line is actually this right here, around the 33.29 area. So if the stock does kind of start to go up in the morning, I would look for some resistance right around this trend line or the next pivot, which is the 33.50 level right here, corresponding to this particular spike right here, this pivot. So probably looking for some resistance in Skechers at this level right here. If it shows some resistance, I would be looking to short it off of that level. If it actually, it's in the gap right now, I would look to short it just, for a very short-term trade down to the beginning of this gap, because that would probably act as a level of support as well. Obviously, if it falls out of the gap and starts to come back down, you have some levels here as well. You've got this trend line, which is a longer-term trend line, and this $30 pivot. More than likely, we'll have to just wait until the market opens and see the action there. It is kind of a messy chart, honestly, and we'll really have to present a good setup for me to take a trade on it. I do like Expedia a little better than Skechers here. Lastly, we've got Mattel. Mattel is spiking on earnings as well. It's all the way up to about the $14.64 level right now, which is right here around this 200-day moving average, just above it. So we would be looking for some resistance at this 200-day moving average. If it doesn't show resistance, however, and continues to go higher, it could, it could go all the way up to the 1675 pivot. If you take a look at the weekly, you see here, it has the potential here, right here. We can put a pivot line right here. So if it can stay above that area, it has the potential to get up to the 1675 pivot right here, and that would be my target on this trade at the most. Mattel It's kind of surprising that it's moved this much. Actually, it's quite a big move on this stock. So, not really liking this trade setup quite as much because of the big move it's had. So I think the main trade for me will probably be Expedia, depending on what it does in the morning. So that's kind of the rundown of the earnings as well as the positions that I currently hold and the trades that I took today. I will bring you a short update and earnings play picks for tomorrow morning just before the open, so that we can get a better handle on these three stocks that reported earnings as well as any stocks that report in the morning. So with that, you guys have a great evening and happy trading to everybody.